Hey, what's up, everyone? This is Silver Slayer. Thanks for tuning in. Welcome. We're talking about critical stuff here, ladies and gentlemen. I'm giving you guys an inside scoop on a daily basis of what's happening in the precious metals world, how it's affecting markets, but most importantly, what you should do about it. You cannot be blindly investing and expecting success. It's not realistic. This video talking about silver prices stabilizing on vaccine news this time around. That definitely was not the case last week. It sent prices all over the place. So what's different this time around? What's happening? We're going to look at that. We're also going to look at how we only might need a few more weeks of patience for gold and silver to take off. What's up with that? I'm definitely going to cover all this in today's video. Make sure to smash that like button, subscribe. You got to be tuned in. Now, we're going to be covering the virus developments that are driving the markets in precious metals. The positive news is being met with less volatility, but markets could be too complacent. Complacency is key. The prices on precious metals were far more resilient this time around to the latest development in the race to vaccinate the global population against this virus. Both gold and silver significantly dropped on news that Moderna's vaccine trial candidate was found to be 94% effective preventing this virus, taking silver down by only 2.5%. Comparison, last week's news that Pfizer vaccine candidate was 90% effective, sent precious metals tumbling 5%, gold almost 9%, or 9% in silver. See, that's crazy because the same thing is happening, actually a more effective vaccine, but prices weren't hit nearly as hard. The market has already priced the inevitability of a vaccine. So initially, the relief in the rally markets is mostly done, right? It almost got desensitized. However, what is more encouraging this time around is that the fact that Moderna's candidate is stable after 30 days of refrigeration versus Pfizer's vaccine that requires very cold temperatures and lasts only until a few days before use. See, people really need to read the fine print. It's a preventative vaccine, only 50 million doses from Pfizer. It's going to be hard to distribute. We still have a long way to go. People think there's going to be a cure tomorrow. Everything's going to get better. It's definitely not the case. We're about to actually have a second wave of lockdowns coming. A lot of countries already are. So people really need to do their homework, but they're not. They're going off of the headlines, the titles, and they think they know what's going on, but that's definitely not the case. So while there are risks of near-term pullbacks in risk appetite as the world battles the pandemic, such improvements in the details are likely to create greater confidence among investors about the medium-term outlook for global growth. However, that is not to say the bull market in precious metals is invalidated, and that's to say that's rightfully so. I mean, we're talking about 20 different reasons why precious metals are going to come out on top. One little thing is not going to have much pull, especially when we look at the bigger picture. We got to step back, look at the bigger picture. I know it's easy to get hyper focused or over analyzed on these day-to-day things, but once you are able to understand the true value of silver, it's blatantly obvious. It is still very early days and many questions that will determine whether the first vaccines and others like it can prevent the most severe cases or quell the virus pandemic that are left unanswered. The market is too complacent. The third wave of the virus is spreading faster and wider in the US and Europe, and analysts at TD Securities say they think the market is too complacent. We think it is prudent to begin introducing some structures that imply some USD firmness. The recovery in real rates and USD continue to cap any material upside in gold, and reactive rather than proactive Fed is keeping the door open for the pain trade to grow in the near term. As we approach the December meeting, the Fed may step in to keep policy supportive for the foreseeable future. As a result, we expect the Fed to change the composition of Treasury purchases in favor of longer dated bonds. All of this suggests real rates should continue on their downward trajectory and ultimately continue to fuel a bull market in gold into 2021. So even another reason why precious metals are going to come out on top. I swear it's every scenario that could play out, every different equation, every different circumstance, every different choice, every different direction that we could go, precious metals will come out on top. It's crazy that people cannot see this. I could give you 100 reasons why gold and silver will be bullish next year, next 3 to 5 years. I can't really give you any reasons why they wouldn't. I could give you 100 reasons why stocks won't be bullish in the next 3 to 5 years, and not many reasons why they would. I mean, if you look at the obvious stats, look at the bigger picture, it's too obvious to really look away from or turn away from. Mainstream media is going to try that. They're going to try to portray a picture of precious metals prices right now, not looking forwards. They're going to say gold, or they're going to say silver's $25. It's still a bear market. But they're not talking about how cheap it is and where the price is headed. See, they're only talking about what the price is right now, but they're not talking about where it's about to be headed. They're not playing the tape through. So gold, a few more weeks of patience. Gold and the precious metal sector are still in a relatively mild correction. Gold support zone around $1,850 will probably not withstand another test. The weekly chart is getting oversold, and a trend reversal is already foreseeable. We suggest a few more weeks of patience and expect the bottom and turnaround until mid-December. Take advantage of that, ladies and gentlemen. I'm telling you, this might be the last couple of weeks, last couple of months that honestly we could say silver was cheap, or that we felt comfortable paying these prices, the spot prices. I can guarantee by the end of next year, you're going to wish you had a time capsule, wish you could go back in time and pay $25 for an ounce of silver. You do not want to be one of those people kicking yourselves in the butt, wishing that you bought more during this time when we know that the price is undervalued right now. It almost is like we are time traveling, because we already know right now that the price is undervalued and that it's going to go higher. So since we already know the information, since we already know how it's going to play out, take advantage of it. Most people are going to be paying $35, $40, $50 an ounce for silver. We don't got to do that. We could be the ones selling it to them at those prices, right? Producers turn into the consumers turn into the producers. So they go into, the ETFs and all this stuff with spot physical gold. What's kind of happening. After all, gold should have exploded thanks to money printing, talking about, this hyper money printing objective of trying to keep up with the stimulus, right? Because when we throw trillions of dollars out, that means we have to print more money, oversaturating, flooding the market with these dollars, also hurting the dollar. Since gold and silver is directly correlated, that's going to push prices higher. So here's the review. Since the new all-time high, which spot gold price reached in August of $2,075, which was the highest price gold has ever been throughout history. 5,000 years, this is the highest gold has ever been. The precious metal sector is in a healthy and expected correction. After an initial sharp sell-off down to $1,863 and a strong bounce up 2015, a narrowing and sideways running consolidation between $1,900 and $1,980 followed from mid-August to mid-September. And here's the thing. While I'm reading this, I wanted to get this point across. When we're talking about gold, silver is just, we might as well replace this with silver and just look at the numbers a little differently, because what gold does, silver also follows suit a couple months after. Right? I mean, I know they're used for several different reasons, but the prices are still pegged to one another. When is that going to separate? I don't know. I've been talking about that for a while. I'm curious when silver's going to have a life of its own. But right now they don't. So we got to pay attention to what's happening to gold as well. So with the slide below $1,930 on September 21st, gold rather confirmed the correction and sold off directly down to $1,850 in just a few trading days. So they're talking about 3-month gold is trading sideways between $1,800 and $1,960. So I'm not going to get too technical on these charts, but basically, we can summarize this stuff. It is important though. I think actually I mentioned this a couple days ago. I think I'm going to start getting more into the charts, how to read them. I mean, I have a good idea. I know what triangle formations are. I know the resistance level, support lines, right? I know all that stuff. But to really read them and really recognize all this stuff, right, that would be pretty beneficial. And I could teach you guys as well. Kind of as I learn, I could kind of teach you guys with me. So I think I'm going to get into that. But if you can look at the charts, which we do on this channel, look at the charts, compare the charts, look at the patterns, and also intertwine that with what's happening in the economy, we can get a pretty accurate, educated guess on where the prices are headed. So in the large picture, the correction, which has been running for 3 months, fits well into the pattern of relatively mild but tenacious corrections. So the logical price target of the ongoing correction will be the upper edge of the dark green upward trend in the range of $1,800. So overall, the weekly chart is bearish. However, a reversal trend is foreseeable. And so they're talking about mid-December. So let's see if they have a summary, kind of, summarizing what's all going on. So that's interesting. They go into the Bitcoin gold ratio. By the way, I post these links in the description if you want to do your homework. Sometimes I just summarize, just highlight the main parts of these articles, so the video isn't too long. But if you ever want to do your homework, do your research, you can check out the description and keep on reading all this in-between stuff that I'm passing. So let's see if this is a pretty long article. So, okay, so in the short term, or let's read this. So a few more weeks of patience in two scenarios. So even though the gold price has been in a treacherous correction phase for 3 months now, the strong fundamentals have not changed at all. The current financial system based on paper currency such as euro or US dollar is in the end game, right? The dollar's on its last leg. There's no escape from the end game. And that's exactly what I've been saying. We're too deep in the hole. No candidate, no president, no attempt is going to fix this. There's no possible way. It's like trying to pay off a credit card with another credit card. It's going to catch up to you, and now it's here. The end is here. In the end, gold will be one of the main beneficiaries because you can't create gold out of thin air with a mouse click. And so often in the history of mankind, the attempt of fiat system will fail. It always has. Every single time it's designed to fail. If the powerful elites in this world do not intervene undemocratically, the whole thing will end in hyperinflation. Otherwise, there will be a reset switch, digital national currencies, and with the physical gold and silver you're well prepared for in both scenarios. So that's what I've been talking about. If it is a new currency, think about it. If there's going to be a new currency in the world, it'd be something along the lines of Bitcoin. It wouldn't be Bitcoin. It'd probably be something like Ripple, because Ripple is actually a cryptocurrency that's controlled by a central bank. That's the one bridge from the centralized system to the decentralized world of cryptocurrency that's on the blockchain, which that stores and puts out every single transaction on a public database for everyone to see. It has and it's a global coin that has instant transactions with zero to little fees. There's definitely some beneficial aspects of cryptocurrency, and that probably would be the next, or something like it would be the next type of currency we would see. So anyways, I hope you enjoyed this video. Like I said, all the videos I'm posting lately, they're vital to watch. I'm not talking about stuff that you don't need to hear. I'm giving you guys some very, very important, very quality information. So I hope you guys are enjoying these videos. Posted another video today earlier that's just as important. All this stuff, every video is really important. You got to be, especially if you're an investor, you got to be paying attention and tuning into this stuff. So make sure you're subscribed. Go check out the other videos I've been posting the last couple of weeks, 2-3 weeks if you haven't, because all of them are important stuff you got to pay attention to. Anyways, thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.